All right. Distinguished guests, ladies and gentlemen, a pleasurable morning to you all. On behalf of the organizers, I welcome you to day 4 of the 43rd Annual International Conference and Exhibition, hosted by the Nigerian Association of Petroleum Explorationists, NAPE. The theme for this year is revitalizing the Nigerian petroleum exploration and production strategies for energy security and sustainable development. For today, we have the Finance and Investment Forum. And yes, the theme of this event, the Finance and Investment Forum, is From Rig to Retirement, Smart Investment Strategies for Oil and Gas Professionals. The focus will be on finding out the practical steps that oil and gas professionals can take to plan for their financial security through proven wealth management strategies. So yes, all our speakers and panelists are ready and raring to go. And I trust that we'll have very, very fruitful and insightful deliberations. As we make progress with this event, please be advised of the following announcements, as I usually like to say at events of this nature. Please ensure that your weapons of mass destruction, your WMDs, are in vibration mode. By that, of course, I refer to your mobile phones. So wherever you are, ladies and gentlemen, please take out your mobile phones and put them in vibration mode. I've not been advised by the management of a hotel that there will be a fire drill today. So in the event of any fire alarm, trust me, that is the real deal. Should that be the case, please do not panic. Just proceed quietly and in an orderly manner to the nearest safety exit and listen to the instructions as will be passed across by the security personnel. We have safety exits all on the left-hand side of the hall, and there's another one on the right-hand side. The muster point is just by the swimming pool as you step out of this hall through any of the exits. On my left, walk down to the end of the corridor, then go straight. You'd find the swimming pool. There's also another muster point in front of a co-signature. Same way, you step out of the hall through any of the exits. On my left, you turn left, walk down the length of that corridor, take another left, and walk down. You get to a co-signature. Thank you very much, ladies and gentlemen. This is also important information from the security department. Please ensure that your personal possessions are always in your line of sight. Your mobile phones, your bags, your laptops, your iPads, iPods, and whatever else you came here with. Please ensure that they are always in your line of sight. That will help us to reduce or eliminate the incidence of misplaced items. It promises to be a long, albeit interesting day, so should you feel the need to answer the call of nature, we have restrooms adequately provided in this facility. As you step out of this hall, which is the grand ballroom, step out of the hall through any of the exits. On the left, you need to turn left. Walk down the length of that corridor, take another left. You'd find restrooms right there, one for the gents and another for the ladies. Thank you very much, ladies and gentlemen. I trust that we'll have a great time today. My name is Temiloluwa Anwobiogbon. It is my job to ensure that you have a smooth and enjoyable ride at this event. I am the master of ceremonies. Talk is my business. Talk is what I do. Today's Finance and Investment Forum is sponsored by Zcrest. Allow me to beg your indulgence. Please give the Zcrest group a sponsor's round of applause. Thank you very much. Ladies and gentlemen, distinguished guests, I want to recognize and appreciate the presence of our host who's with us today, the president of NAPE, Mr. John Bosco Uche F. NAPE. Round of applause for him. Thank you very much, sir. You're most welcome. It is an honor to have you with us today. We also have in the room the president-elect, who also doubles as the chairperson of the Conference Planning Committee. Ladies and gentlemen, Mrs. Olajumoke Ajayi F. NAPE. Round of applause for her. Thank you very much, ma'am. You're most welcome. It is an honor to have you with us today. The Group Managing Director of Zcrest Group is with us, Adedayo Amzat CFA. Round of applause for him. Thank you very much, sir. You're most welcome. It is an honor to have you with us today. We also have the full complement of our speakers right here in the room. The Acting Managing Director, Zcrest Securities, Simbiat Bada. Round of applause for her. You're welcome, ma'am. It is an honor to have you with us today. Chief Product and Strategy Officer, Zvance Finance Limited, Ayoluwa Oladimiji. You're welcome, sir. Executive Director, Sales and Business Development, Zcrest Wealth, Abbas Akinsonya. You're welcome. Head Research and Portfolio Management at Zcrest Wealth, Luke Ofojebe. You're welcome, sir. Executive Director of Finance and Strategy at Zcrest Group, Joseph Adegunwa, CIMA. You're welcome, sir. Vice President, Product and Operations, Leatherback, Usman Amosat. You're welcome, sir. The moderator of our panel discussion is a lawyer and corporate governance expert, Ibukun Oshoba. You're welcome, ma'am. Research and Portfolio Manager at Zcrest Group, Charles Njoku. You're welcome. The body of past presidents of NAPE in the room, you're most welcome. It is an honor to have you with us today. The members of the Board of Trustees, Advisory Council, Executive Committee of NAPE, Fellows of NAPE here present, Chairman and President of Allied Professional Associations, Captains of Industry, members of NAPE, young professionals, distinguished guests, ladies and gentlemen, you are most welcome. If you are in the hall today, as of this minute, you are a very important personality, a VIP. Allow me to beg your indulgence. Please give yourselves a round of applause. Without further ado, allow me to invite our host up on stage to give the welcome and opening remarks. Please make welcome the President of NAPE, Mr. John Bosco Uche F. NAPE, for his opening remarks. A round of applause for him as he takes the stage.
Thank you very much, Mr. MC, and good morning, ladies and gentlemen. Today is day 4 of our NAPE conference. You know, we started counting from Sunday, and tomorrow is day 5, where we will take it to the end. So I first want to say a big thank you for your commitment from day 1. Also for our pre-conference activities, you've been actively participating. So again, many thanks for the trust you have in NAPE and our leadership. We'll stand on already established protocols. So I won't go through the list again, but permit me to recognize our distinguished fellows that are here in the room. You can recognize them. Past presidents, I see also BOT member and some AC members here. The executive committee member of NAPE, including the YP as well, and every distinguished member of NAPE, special guests, you are really welcome. So today, the topic, it's a bit of a new initiative starting this year, right? I mean, you know, typical thing we normally do, executive session, management session, and rest of things like that. But it's equally important that we think about our wealth and what we do. You know, when we all have to retire at one point or the other. And why I'm particularly interested in this topic is that, as you know, we push for our program with the University Assistant Program, which we try to say is bridging the industry and academia. Today, I will say clearly what is going to be happening today is bridging your working time and your retirement time. You know, so I'm really looking forward to listening to our panelists and our speaker and learn on what we need to do. You don't need to wait until you're 60 or retire to be able to know what you need to do. So I'm really looking forward to it. And especially, before I leave the stage, I want to say a big thank you to Zcrest, the GMD and your management for the commitment and the trust you have in NAPE to sponsor this event. And for the first time sponsoring an event in NAPE conference. And just before we got in here, he already was promising the president-elect that he's going to do much more. So watch out for Zcrest from next year going forward. So thank you for that. So on that note, without wasting most of your time, please relax and enjoy the remaining part of today's session and the remaining things that we have to do this afternoon and then tomorrow to the grand finale. Thank you once more and welcome to this session today.
Yes, we have a full lineup of activities for today. We'll have some presentations. There's also going to be a panel discussion. And yes, there'll be an opportunity to ask questions. We'll also have one more activity session immediately after that panel discussion. And yes, with those words, the president of NAPE, Mr. John Bosco Uche, FNAPE, has indeed set the tone for this event. Allow me to beg your indulgence. Please give him another round of applause. Thank you, Mr. NAPE President. Thank you for those words. All right, please make welcome the Group Managing Director of Zcrest Group, Mr. Adedayo Amzat, CFA, for his introductory address. Please give him a sponsor's round of applause and ensure that the applause continues until he gets on stage. Either way, yes, we have stairs on either side. Thank you. Thank you, sir. You're most welcome.
Good morning, ladies and gentlemen. The super experts of the economy that drive Nigeria forward, the energy industry. You are a particular segment of people that we find very mysterious because we don't know how you do what you do. We do all our business because Nigeria is sound, and Nigeria is sound because the experts gathered in this room and beyond, they drive Nigeria forward. For the past almost 70 years now, from the first discovery of oil at Olubiri, I think we were there together, madam. Yes. And then thank you really for the opportunity for us to work together today. Zcrest is a full-service investment management and investment banking group in Nigeria. We've been around for 12 years. And we make a lot of money, by the way. But what is important to us is while we make money, are we developing the ecosystem further? We need to make the pie bigger before we can get a decent share of that pie. And when you have an association like NAPE, where the most illustrious sons of the soil, the most illustrious professionals are gathered, then it is important that we partner together to see how we can develop value together. You see, when I was in university, I did industrial chemistry, first course. And the only thing we all thought of was oil and gas. Because, I mean, what's the alternative? Soap factory. You know, so, but if you get into the oil and gas industry, then you can be rich. And we tried our best. You know, it didn't work out. Did another master's for chemical process engineering applied to do another master's while I was already working in the bank. I got in, but there was no money to pay tuition, so I had to abandon that. But as life will have it, when we continue the work of finance, I met great people in the industry like Mrs. Ola Jumoke, and today I'm also a player in this energy space. I'm so delighted to be here again, once again. And fantastic job, Mr. President, Madam Incoming President, fantastic job. Rig to retirement, what do we make of that? You see, my people say something, idi share ni lati money lole, which means there's no one that is incompetent in their job in a sense. There's no one that is not an expert in their own field, right? So it's okay to be an expert in the energy industry. My madam here is a very strong geophysicist. That's the word. When she tells me short string, long string, choke up, choke down, I lose my senses. So she's an expert, no doubt about it. And it's okay. You don't need to be an expert in the energy space and then know medicine. You don't need to do that. There are other experts there. If you're an expert agriculturist, you don't need to know engineering. You can contract it out. But there's one field that we all cannot afford to not be experts in. Who knows what that field is? Anyone? Finance. It drives the entire world. It drives the industry. Oil and gas is one of those sectors that all of the wealth, all of the potential, when you do RBL and you value the field, all of that wealth is 3 kilometers underground. You know, when she started the drilling program and I was invited to check it, and I'm like, where's the oil? They said it's down. Where is it? They said it's down, 3 kilometers down. And it's not like one big thing that you dig. It's just one slim, maybe 10 inches radius thing that you dig all the way down. So all of that wealth is really, really down. So it's a lot of expertise. So you need a lot of capital to bring that oil out. Without the capital, all of that oil is worth nothing. a lot of the basins across the world have massive reserves of oil, but without the friendly policy making that will bring capital, it is worth nothing. So we're all experts. But to run energy industry very well, we need access to capital. To know how to manage the capital stack well, we need to be finance experts. That's at the corporate level. At the individual level, the research says that they have the richest employees in Nigeria are those that work in this sector. Please clap for yourself once again. And as you are going, please go to Zcrest stand and put some money for investment there. But people have gotten this mastery over the years. They've built this wealth from their big salaries and their first oil bonuses and their anniversary bonuses, but they are not experts in finance. And there's something about finance where it looks so simple to those that are inside, but to those who are outside, it looks like jargons. You know, I remember my first job, and the first week we were in the bank, treasury of Access Bank then, and then Joy, who was managing the FX liquidity, was cross-legged, saying, we owe about $50 million, Tom next. We owe about $200 million, Tom. I'm like, what's she talking about? What's Tom next? You know? So when we do all of this good work in the energy industry and we make so much money, then we become 55, and Shell says, thank you very much for your good work. Here is your severance pay or your gratuity. Then you see people go into scrambles, right? They then realize that I have all of this money, but I know next to nothing about money. And there's, I won't call it a stigma, but what I've realized amongst people that are close to me in other sectors, they are so good, they are experts, but they can't come and tell you that they don't know how to calculate interest rates. They don't want to voice it out that I don't know what you mean by the stock market or what happens there really. I just hear one guy tell me that I can make 30% in a month, and I gave him my money. Or in 2007, when the stock market was making so much money for everyone, a stockbroker will come and tell you that, please tomorrow buy Dunlop. And then you ask him, why should I buy Dunlop? He says, Dunlop went up yesterday. So that's the reason why you should buy Dunlop. That means they can go up forever. So a lot of people have lost so much money because they don't know about money. People know money, but they don't know about money. They don't know the language of money. And so Zcrest today exists to enlarge the cost of knowledge about money. We want to empower people so that they know about money, so that when retirement comes, they will be comfortable in the type of financial decisions that they make as investors. There's so much money that you make while you're working, but retirement is a very different ball game. I want to empower everyone in this room and beyond with the competence, with the relationship and the products that would allow you build a very healthy portfolio from rig to retirement. So thank you, everyone, and have a fantastic discussion today. Please pay attention. We have a lot of things to talk about today. Thank you, everyone.
You heard the fine gentleman. It is essential to plan for the future. And yes, you must ensure that financial security is at the heart of whatever it is you do. So as you make the wealth, it's important that you understand how to deploy wealth management techniques to ensure that when you do retire, after having worked actively, you will have a lot to rely on. Thank you very much, sir. Thank you for that introductory address. The Group Managing Director, Zcrest Group, Mr. Adedayo Amzat, CFA. Thank you very much. All right, we have yet another presentation. Please join me to welcome the Research and Portfolio Associate at Zcrest Group, Samuel Aladegbayi. Round of applause for him as he takes the stage.
Thank you, everyone, for having me. It's a pleasure to be here again. I mentioned it again because sometime earlier this year, I had a session with the NAPE Young Professionals, and that was very robust. I remember there was a lot of questions and the likes that came into that particular session, and I hope that we'll have similar questions in this session. Please, slide. Thank you. So what am I here to talk about? From drilling wells to drilling wealth. I promise you my GMD has not seen the slides that I'm about to go through, but he really touched a lot of the things that I'm going to go through, and that just shows great minds think alike. Next slide. So, the wrong questions lead to the wrong answers. What do I mean by this? You know, there's something I usually like to start with whenever I handle sessions like this, and it is, people tend to ask the question, what should I invest in? What should I invest in? What should I invest in? And that's the end, right? Someone tells you invest in, okay, I was going to call an oil and gas company, but maybe I should be careful. Someone tells you invest in Apple, and you put 5 million naira into that, or 500 million naira, however much you want to put, but you don't know why, right? And what is the first question, but why is the real question? It builds that conviction that you should have when owning an investment, an asset, whether it's a stock, a fixed income instrument or not. And the same care that you take into picking a school for your children, or the same care that you put into building a business, right, doing your research, should be the same care that you put into making an investment decision. There's the what that builds the foundation, then there's the why that builds the conviction. That conviction is what makes you buy the dip, as a lot of you might have heard in a lot of markets, volatility periods. So like I said, curiosity versus conviction. Curiosity asks questions, conviction holds steady when volatility strikes. Second one, before I get to the third one, Buffett's principle, who is I like to see as my mentor, talks about invest in what you understand and understand why you own it. Now, back to buying the dip. I like to talk about my own personal experiences. And, back in, I'll say, late 2023, there was a stock, right? It's an e-learning platform, Chegg. Stock was trading at maybe around $11 per share, right? And typically, what I saw in that business, I didn't really know it though. I just knew it was an e-learning platform. And, by a little bit of analysis, I looked at their balance sheet. I saw that, the real value of this company is $1 billion. But if you take their market cap, it's $900 million. So in my mind, I'm like, if I own the whole business and I sell it, right? If I'm buying it $900 million on the stock market, I sell it for $1 billion, I've made $100 million. This stock went from 11 to 5. I was buying the dip. It reached $1. I sold all the dip. Why? I did not understand that this business, the environment that they played in, right, was really different. And if I understood that, even though I'm buying the dip, but this company, their trajectory is not going well. Why? E-learning platform, but GPT is taking off. Nobody's really using these platforms anymore. I didn't understand the business. I was just looking at the numbers. And I think that that's why investors should really take into that account. Now, what do I mean by that? To bring it to our own personal experiences. Some of us, we have our own investment managers. Let's be frank. We have Zecret, but we also have people that we also use as well. Your portfolio manager or your wealth manager tells you, put your money in Euro bonds, put your money in fixed deposits. How many of you have asked that question? Why? Obviously, we have dollars and naira. Okay, one person in the audience. Very good question. But how many of us have actually asked that question? Why? But just tell you what to do. I'll move to the next slide to really build up on that premise. Markets evolve and your mindset too. Finance moves like reservoir geology. Opportunities shift from one layer to another. The investment landscape is dynamic. Staying curious means recognizing where the best risk-adjusted returns have moved. If you don't take anything from what I've said, take that opportunity line that I just said. Best risk-adjusted returns. I'll try to paint another context. I started with stocks. I'll go towards fixed income. Before, maybe in the equity market, you could get 20% returns in a year, right? On treasury bills, maybe you do, or fixed income assets generally, maybe a bond, you get like 12% or 14%. Now, if you ask which of those are more risky, stocks or fixed income assets, especially the ones issued by the government, you say stocks, right? Because if the government is issuing you debts or issuing fixed income securities, essentially they're loaning money from you. The likelihood that they will pay back is very high. Why? Because, they print money, right? Bad as it bad. If I don't have the money to pay you back, I'll print and pay you back your money. But if I see that I can get stock-like returns on an equity instrument, I like using the example, number 10 level of risk, number 10 level of reward minimum. I must not get number 9 level of reward when I'm taking 10 level of risk. Because I have my guy that is taking 5 level of risk. Why is he getting number 10? The same thing I'm taking, but we're taking lower risk. Best risk-adjusted returns. My wealth manager comes to me, invest in Euro bonds, is giving me 9%. What if I see another instrument with the same level of risk that can give me, even if it's 9.1? Ask those questions. Be curious. Why? Why should I invest in this thing? Explain the thesis to me. You have that right. At the end of the day, it's your money. You have that right to figure that out. best risk-adjusted returns. I was reading Otedola's book, right, when he was talking about when early days of FO properties, and he was talking about back in 2004 when they invest in real estate, you could recoup your money in 5 years. That's making it big, to reference the book that I was talking about. You could recoup your money in 5 years. He says now it takes about 35 years to recoup your capital. From 5 to 35, markets evolve. If you were telling me invest in real estate now is not real estate then, that's not to say it's not, a fruitful investment opportunity, but markets evolve. Interest rates were going up. Now they are coming down. How do I take advantage of this evolving market landscape? Not that they're telling me invest in this for 10 years, and all of a sudden the opportunity is moving to something else, and I'm just there looking at, okay, but this is not more doing as well anymore. So the 3 keys to actually be adaptive when you're investing. 1, recognize the shifts. When yields change, reassess where capital flows. Obviously, this might not be our core industry, so you might need to consult your investment manager, which is why we're here, to be frank. I mean, you have a lot of people wearing Zecre shirts, and you can always meet any of our wealth managers to get you in contact with a portfolio manager or a research analyst. 2, stay informed. I mean, Otedola also talks about that in his book, by the way. Understand your markets, whether emerging or developed. Avoid complacency, which is what I just talked about. This always works, is how wealth erodes. Back to the real estate example. Okay, 5 years capital. At 5 years, I'll recoup my capital. Now it's 35 years. What's happening? But there are other investments. There was recently, at the end of last year, you had a bond that was giving you over 20% interest. It was a 10-year bond. Okay, I'm speaking English. What does that mean? 20% means you are getting your capital in 5 years. The same real estate investment that Otedola was talking about, that, if I invest, I'll get my money back in 5 years. It's the same way on a bond that is safer than real estate. I'm not have to face some money. I don't have to face the risk of maintaining a house that maybe my client has spoiled or something. You understand? But it's just a bond. What is a bond? The government has borrowed money from me. I get that certificate. They pay me back. It's risk-free, realistically, right? You could get 20% on a bond. That's an opportunity that, just creates in the evolving financial landscape. So this always works, is how wealth erodes. Yes, you might be making some steady cash flow here and there, but at the end of the day, you want to make sure you are making the best possible version of returns for your investments. I must add, what I'm talking about here is, pretty much just the foundation for what's really going to be delved deeper into in our panelist session. Next slide. Oops, okay. Before I even go into phases, I know another question that a lot of people might ask is, because there's the what should I invest in, but another example of evolving financial landscape is, what we're seeing with capital against tax. I've had a couple of, even my friends that work in the oil and gas space ask me, how am I going to invest? What should I put my money in? They're not asking me why. And I try to, urge them towards asking the real questions, which is why, but that will be delved into the panelist session. I don't think I have the time to delve into how. I just want to give an example of another emerging financial landscape. 3 phases of, your investment journey, from income to legacy. Thomas Armstrong, in his book, The Human Odyssey, I don't know how many of us have read it, he talks about 12 stages of life, 12 phases of life. And I think in everything, generally, life can be broken down into 4 phases, or into several phases, rather. For investing, I would put it as 3. You have the build income phase, your phase 1, arguably the most important, right? These are your Ronaldinho years, you're in your prime. You're scoring all the goals, you're getting your steady income. Most oil and gas professionals, and other professionals, to be frank, excel at phase 1. You build strong income, dollars, naira, life is good. But the real challenge lies ahead. What happens when those reserves start to dry up? As operational production declines, financial capital becomes your primary asset. What have you recouped? What have you learnt? Even if you not recoup, what have you learnt, right? What knowledge have you gathered when you were in your prime that you can use to sustain or even better your life? This requires intentional planning across 3 distinct phases. Build income, strong earnings, steady cash flow, you're at your peak. Now, a lot of us in this room are in between phase 1 or phase 2. I see a lot of young people at the back, so I know they're probably more in phase 1 than a lot. As the room gets closer to the stage, it's like they're getting older, so I don't know if that was planned. So this is the phase where you grow capital. You convert those paychecks into primary assets. Risk and return must align. If I'm taking number 5 risk, number 5 return, I'm not getting anything less than number 5 return. Diversify across asset classes, stocks, bonds, equities, real estate, alternatives. I wish I had the time to go deeper into all of this, but maybe in another session when we sponsor next year, like my JMD has promised. uh, then protect and transfer, shift from growth to preservation. Ensure wealth sustains your lifestyle and legacy beyond your career peak. So this is the stage where your reserves have dried up. I mean, in terms of steady income, right? You're no more getting that monthly income. It's more about what you've learned, how you've preserved your capital, how you've communicated with your investment managers. What have you picked from these investments? And one thing about, if you don't take anything from here, I think you should just take that why question very, very seriously. A famous investor that managed the Fidelity Fund, Peter Lynch, a lot of us might not know him because it might not be our industry, but he talks about investing in what you know. I think about 2 or 3 weeks ago, I had an oil and gas professional ask me what oil and gas stock he should invest in. It's your industry. You know more than me. I'll crunch the numbers, yes, but you know more than me, right? I can only give you maybe guidance, but you know more than me. So I think it's about also realizing your edge, right? Invest in what you know. Invest in where you stand. If I'm a banker, I know banks more than any financial analyst that wants to come and talk to me, or any financial manager or investment manager that wants to come and talk to me about banks. What he can do for me is give me context and guidance around, what is going on in the industry. But I know this more. So recognize your edge. Whether it be you want to be, obviously you diversify, but in terms of your knowledge, just recognize your edge. Your edge is perishable. Well, your edge in terms of working. Turn it into permanent capital today, or watch it decline faster than your reservoir. Do not save what is left after spending. Spend what is left after saving. And, as I wrap up, I would just like to say, if you don't take anything from this session, I think what you should take is that why question. It is very important. My GMD also talked about, investing in what you know and gathering that knowledge. And it's very, very key because knowledge compounds just like your investments. The knowledge that you're getting from from your consultant today might save you tomorrow, might help you give better context and perspective in your investments tomorrow. And thank you. That brings me to the end of my presentation.
That was very, very informative. And yes, that short presentation provides important insights into strategic investing, build income, grow capital, and protect and transfer. Thank you very much for that presentation. Research and Portfolio Associate at Zcrest Group, Samuel Aladigbai. Thank you very much. All right, ladies and gentlemen, we'll move straight to the panel discussion. And yes, our panelists will be adding their voices to the conversation. From rig to retirement, smart investment strategies for oil and gas professionals. Please join me to welcome our first panelist, the Acting Managing Director, Zcrest Securities, Simbiat Bade. Round of applause for her as she takes the stage. We have stairs on either side of the stage, so your preferred choice, really. Thank you very much, ma'am. You're most welcome. It is an honor to have you this day. Your chair is right at the end of the stage. Thank you, ma'am. Our next panelist is the Chief Product and Strategy Officer at Zvance Finance Limited, Ayoluwa Oladimeji. Round of applause for him. He joins Simbiat Bada on stage. Thank you, sir. You're most welcome. It is an honor to have you with us today. Also joining the panelists on stage, please make welcome the Head Research and Portfolio Management at Zcrest Wealth, Luke Ofojebe. Round of applause for him. Right. Thank you very much. You're most welcome. Right beside him will just be fine. Please also join me to welcome the Executive Director, Finance and Strategy, Zcrest Group, Joseph Adegunwa, CIMA. Round of applause for him. And last but definitely not the least, please make welcome Vice President, Product and Operations at Leatherback, Usman Amusat. A round of applause. Thank you very much. Right here will just be fine. There you have it, the full complement of our panel on stage, and they will be adding their voices to the conversation from rig to retirement, smart investment strategies for oil and gas professionals. To drive the conversation for this panel discussion, please make welcome our moderator, a lawyer and corporate governance expert, Ibukun Oshoba. Round of applause for her. She joins the panel right here on stage. Thank you very much, ma'am. You're most welcome. It is an honor to have you with us today. Ladies and gentlemen, there you have it. We have the full complement of our panel on stage, and Madam Moderator is seated. Madam Moderator, your timer is right there. That's the mic. Let the conversation begin. Thank you.
Hi. Good morning, everyone. Thank you for joining us today. We're going to get right into the conversation about rig to retirement and just discussing how you can invest smartly as an oil and gas professional. So my first question, of course, is going to go to Joseph. And it is, despite the high income potential in the oil and gas sector, many professionals face post-retirement financial strain. What recurring behavior or structural issues contribute to this trend?
Hello? Okay. So in terms of the behavioral issues, we're looking at things like lifestyle inflation. So as people earn salaries, their expenses also increase. So at that stage, you are not saving enough, and you are not able to put in enough for your retirement. Also, there are things around low savings culture. So if you're not saving enough, then you won't have enough money during retirement as well. Also, in terms of diversifying your investment, so investing in different asset classes, from the pension to real estate and the other asset classes that we have. And also having a clear retirement plan as well. That's also a behavioral issue as well. And also, as you earn big salaries, you also have issues around your family and also people coming to ask for money. So black tax. So that also affects the ability of people to save as well. And then when we look at the structural issues, we look at things around the pension scheme. So though that has been done well now, where you have a good retirement scheme where people can save and then have those monies during retirement. And also we have things around the general economic inflation. So 1 naira today is not what's the same in 10 years' time. So if you don't have an investment that is inflation proof, that can also be an issue as well. And then we also have things around taxes and also corporate lifestyle, where when you get to age 50, some people are asked to resign. And if you've not planned ahead of that, that can also affect you as well. So yes, thank you.
Okay, thank you so much, Joseph. So like you said, there's a lot of issues when it comes to how people save with the culture. We also have black tax, and we're all talking about 2026 and the new tax laws. So just pivoting from that to Ayodua, let's talk about firms that are affiliated with the oil and gas industry. How can they leverage creative financial solutions to fund their growth ambitions?
Thank you very much, and good morning, distinguished ladies and gentlemen. It would be good if you take the question again so that.
Okay, so I was saying that firms that are affiliated with in the energy sector, how can they leverage creative financial solutions to fund their growth ambitions?
Thank you very much. So the conversation is you're stretching the conversation to be all encompassing beyond those of us who work in the sector as individual professionals, to allied
organizations or firms, the petroleum industry and indeed the wider energy sector relies on the combined expertise of different entities, different firms that are specialists in their respective areas. The opportunity that financial services innovation provides when you're working with a value chain like the oil and gas sector is that the sector by design is already partitioned, into what is called upstream, midstream, and downstream. And in terms of the financial need or the capital need required by the firms that play at these different levels, the size of the need, the flavoring of the required, capital structure varies. For us at Zcrest, as an innovative financial powerhouse, one of the things we've done is to focus our attention to extend value chain financing to the midstream and the downstream, where you have oil and gas distribution. So when you say innovative financing solutions, it would be asset financing for oil servicing firms that operate in the midstream, for example. When you talk about innovative financing solutions, it would be foreign currency denominated lines of credit that allows such firms secure the purchase of operating equipment and bring them in to execute on service contracts. When you talk about innovative financing solutions, it would be some of the ecosystem opportunities that we have as a bundle of entities that are capable in different regards to make payment collections and transfers possible both within and outside Nigeria for firms that operate in that space. And I think that the biggest area of opportunity that we currently play in today, which I believe will be relevant even for those of us who are still active professionals in the industry who are planning for retirement, is the downstream oil and gas distribution, where today we provide growth capital, mostly debt capital, for entities that already operate distribution of PMS, AGO, the various gas products, both domestic gas and the one that is used for firing industrial turbines. So those financing products exist, from inventory financing to lines of credit to import financing facilities and all of that. And we attach technology, digitization to all of that. We attach financial advisory to all of that. So not only are we able to provide that in those bundles of innovative financing products, but we can also advise you on how to fundraise from other sources and so on. So yeah, there's a lot more to talk about on that front, but those are some of the things we've done, and those are some of the opportunities that we might want to pay attention to, as we interact with the firms that service us on the one hand, and as we also think about the future, preparing for retirement as individuals in the sector. Thank you.
Okay, thank you so much, Ayolua. So we've heard about the trend, we've heard about the opportunities for the firms in the sector, and I believe that anyone here can, contact Zcrest about more information. I'll go to Luke and ask, so we have oil and gas professionals who, of course, they have strong earnings, we all are aware of that, but inconsistent financial investment practices. What patterns have you observed, and what lessons should today's professional be taking when they want to build sustainable financial growth?
Thank you, Ibukun, for the question, and good morning to the amazing audience here today. I'll start by saying this. When we've noticed inconsistent investing by oil and gas professionals, and maybe that's due to some form of indiscipline or whatnot, I think the way to go about it, the way to address it is, first and foremost, you need to have an investment advisor that you work closely with. And what that does for you is that the investment advisor will be able to profile you, understand what your risk and return objectives are. For return objectives, it might be to outperform inflation here in Nigeria. Currently, inflation is around what, 18%. Mid 2024, it was around 34%, quite high. So, for you to be able to be sure that your money is not losing value, as if it stays idle in the bank, there is the need for you to work with an investment advisor that can work with you on how to ensure that you're able to achieve your return objective. Another return objective might be to outperform, currency movements. I mean, over the last few years, we've seen severe currency devaluations in the Nigerian markets, mainly due to a couple of reasons, falling oil prices, global tensions, and a couple of other external factors, right? And what you typically find in a developing market like Nigerian markets is that in the long run, um, their currencies will always underperform currencies of advanced markets, right? So there is also the need to ensure that whether you are earning in naira or in dollars, you want to be sure that the return on your investment portfolio can adequately outperform currency movements. So that can also be a return objective as well. Then beyond return objectives, there is also the need for the wealth advisor to understand your risk objectives, right? So maybe at the start of your career, I mean, you have that capacity and willingness to take risk because, I mean, your earnings potential is still very high. Maybe you're just in your 20s, you're just starting entry level salaries. By the time you get to the manager level, I mean, your salary should go up significantly, right? And that means that going forward, just from the start of your working life, you expect that your salary will continue to improve. So on that basis, it means that your ability to take risk is also going to be high. So what we typically do, what your investment advisor will typically advise you to do is that at the start of your work life, you want to allocate more to instruments that can do well in the long run because you still have a long time to be in the workforce, right? So most likely you want to allocate more to equities that have the potential to outperform inflation, also have the potential to outperform currency risk, and maybe less exposure to fixed income instruments. But as you grow older, then there is the need to minimize risk exposure in your portfolio. And what this means is that you want to now allocate more to fixed income instruments where you can have stable returns and less volatility in terms of returns. Whereas you now have less exposure to equities because of the volatility in that space. But the major thing to be mindful of here is that you need to work with a wealth advisor that will be able to profile you effectively, understand what your risk and return objectives are, and be able to come up with an appropriate asset allocation that will be able to meet your long-term return and risk objectives. Again, when I say asset allocation, it's really just your portfolio mix. And this is not going to be static. It's something that will be reviewed periodically, maybe at the end of every quarter, just to understand where you are at every point in time to be sure that your risk and your return objectives have not materially changed. If there is any major change in your return objectives, then there is the need to also revise your assets allocation, and that way there will be some revisions in your portfolio mix. But the goal here is that at the end of the day, you are able to achieve your long-term goals. And for you to be able to do that, you need a wealth advisor that thoroughly understands the markets and also thoroughly understands where you are at this point in your career and what your goals are. And that way, you should be able to realize your long-term dreams.
Okay, thank you so much, Luke. That's very insightful. So I think we've had a common thread today, even from the presentation. First, we are talking to high earners. Second, we're talking to people who are in a culture where there's a lot of pressure on your finance, whether it's your family, whether it's the government. And so, as Ayoloa has told us, there are a lot of opportunities in the market. There are a lot of things that you can actually invest in. But like you said, your returns objective, so key and so important. So I know Nigerians are very big on property. Samuel has already told us 35 years to 5 years is something. So let's consider that as we go to Symbiat. And I would like you to talk to us about the equities market. So over the years, equities have played a secondary role in most professionals' portfolios. What factors have limited participation, and how can that mindset shift happen?
Thank you, Ibuko, and good morning to everyone here. So I would start with investors generally being risk averse, and that has majorly been the reason why it's been a secondary, equities has played a secondary role in the general portfolio. And I mean, we won't blame investors. Recently, we've seen trends, global trends affect equities markets. We had one in 2018 where we saw a significant downtrend in the market. But speaking now, moving to mindset shifts, right? We need to look at financial literacy. I think Samuel really touched on that a lot. So, what are those things that we need to understand before even coming to the equities markets? So financial literacy on why you want to even come into the market, return composition for equities, sectors why should I be invested in this sector over another sector? And also speaking more to return composition for equities, which is also very important. For fixed income, we have just your what's it called? It's sets. You have your interest rate, your capital, and you get that at the end of the investment. But for equities, it's not really capped. You have your dividend, right, which is also grows as the company expands. Their dividend payout ratio increases, right, as they continue to earn as your revenue continues to grow. Then you also have capital appreciation, which isn't capped. You can get a 10 naira stock today, and a couple of years, it's done times 5 or 6, right? So return composition also helps, like understanding generally what equities market is about helps with that mindset shift. And like Luke mentioned, if you want to really achieve that long-term goal, you need to have, there's a strong need to focus on equities as well. Because with equities, you are able to outperform inflation, which is very important. We've seen NGX ACI consistently do this in the last 3 years. 2023, the market returned about 45%. 2024 was about 37%, and this year is ASI is about 40%, right? So long-term wise, equities is important, but just understanding why you're coming to the markets, what sectors to invest, just know what these companies are doing, and yeah, I think that would help with the mindset shifts.
Okay, that's awesome. I'm very happy with when you talked about 40% increase. I was talking to someone this weekend, an oil and gas professional, interestingly, and he said, he was just dipping his foot very gently into the capital market, and he put in about 3 million, and it's grown to about 7 million. So definitely encourage everybody in the room to speak to any of the experts to get more information. I'm going to say, if you have any questions, please just note them down and we'll take it at the end of the session. So moving to the FX market, which was a big player for a long time, I'll go to Usman. So FX volatility has consistently influenced both corporate performance and personal investment outcomes. How can professionals structure multi-currency portfolios that preserve value without excessive dollar exposure?
Okay, so to start with, I think for most professionals in the house, the constant revisiting to your FX platform to check the exchange rate between naira and dollar is born into our consciousness now. We do it every day, we do it in conversations, but the goal essentially shouldn't be the over dollarization of your investment portfolios, right? It should be to maintain value across different strong and stable markets across the world. Now, to start and to build a very structured portfolio that has multi-currency tendencies is to first look at what are your real financial life. What do you plan for? Are you planning to have real estate in, for example, in Europe, in all of these other continents, then you plan accordingly. So that's something they call natural hedging. That way, you are saving and holding value in these currencies because you have eventual use for them based on the way your financial life is planned out. That's the first thing. So match your currencies and the selections of those currencies in those stable markets according to your financial plan. So if you have school, you have a family, you have real estate investment, other types of investment in those currencies, you can start to hold value there now. Number two is that you need to also structure the distribution of those assets. So instead of keeping 100% of your asset in USD, for example, you can do a 40, 30, 30, division of your portfolio to say 40%, for example, in USD, another 30% in GBP or CAD, which is Canadian dollar, another 30% in Euro. You start to have a well-balanced portfolio that can outlast a lot of your hard work from your rig to your retirement. And finally, for you to do this effectively, you need to use multi-currency platform that allows you to hold these currencies effectively. This is where Leatherback plays a very strong case here, where we allow you to hold currencies, these currencies in actual bank accounts in these countries, and then you can access them, you can spend from it, you can make payments, your mortgage payment, your school payment, rent, all kinds of payment can be made from this bank account, and that's one of the key product that we have for the audience. Thank you.
Okay, that's very exciting because I know that FX is one of the challenges a lot of people face. I'm going to go back to Joseph. And, we've talked about a lot today on this panel, whether it's corporate stance or personal stance. I'm curious about the investment, when it comes to investment, what are the governance or financial planning frameworks to ensure that there's continuity of wealth, especially as an oil and gas professional, for myself, for my children, or for my organization?
Yes, thank you. So in terms of wealth preservation, research has shown that under 70% of families are able to pass generational wealth to the next generation, and less than, even a lower percentage, less than 10% is able to pass it to the third generation. But typically what should be looked at is around wealth preservation is things around asset planning, liquidity management, and in climes where this has been managed well, two structures have typically been used, which is one is the family office. The family office basically looks at managing the family's assets and is able to help manage the assets based on the objectives of the family, and also use of trust and estates as well. So if either of these two structures are used, then wealth is being able to be passed from generation to generation, and the wealth is also preserved as well. Thank you.
Okay, so that's very good. So for anybody thinking about how to, preserve your wealth and grow it, contacting the family office is important, and just going through that process. I'll go back to Ayo and say, how can oil and gas professionals leverage institutional partnerships and blend financing models to drive sustainable wealth creation while minimizing exposure in the market?
These questions, they sound very technical, but I'll just paraphrase to get to the substance of what I think the question is trying to establish. When you work in the oil and gas sector and you're planning your wealth creation and wealth building strategies, the question says, how do you leverage firm partnerships or institutional partnerships? I would approach the question in two ways. The first is to partner with knowledge enablers and access providers. So at a personal level, we've heard today, summarily, that having the right knowledge about the investment instrument or vehicle to use, and the dynamics around the investment landscape is critical to building wealth. So certainly, it does stand to our benefit to partner with a wealth management and asset management firm. The second is that there are investments, and that's how money works. When our GMD was speaking earlier, he did mention that, because you are an expert in your own industry, you know everything, you have a good sense of what is going on in your industry. But there are folks who also know what is going on elsewhere. And when businesses that are seeking growth are trying to raise money, when they're seeking to expand their shareholders' funds and all of that, you've heard things like private placement. Before what we call private placement, you do have what I call privileged access, where, because I know that Luke is an expert and he has the liquidity and he has the investment appetite, I will share information with him about a potential investment opportunity, and he can then invest. So that means he then has access. So how do you get this access? You have investment clubs. You have, I think they're mostly investment clubs. And I also believe that a good number of wealth managers provide those investment guidance beyond the nominal investment instruments like equities and fixed income instruments. So that's layer one in terms of who you should invest, the relationships you should invest in building. Layer two is on the entrepreneurial side. I have a bias for business solutions or commercial solutions. So whatever I say, I will always take it back to how we're solving for businesses. And I know that building a business or owning a part of a business is one of the surest ways to build wealth. There's ample evidence globally to that effect, but there's also ample evidence globally that new businesses die within, a significant percentage of new businesses go off within the first 3 to 5 years. How do you then edge that risk if you're going into entrepreneurship? I think the first thing is to look at what I call frontier sectors. We're in Nigeria, and we know our industry. We know that the industry has been deregulated, and that has commercial benefits. We were speaking to one of our partners, and he mentioned that for the first time in a long time, the folks in distribution are now making bank. They are making good money because of the deregulation. So he's saying that by being a player in the sector. Clearly, whatever it is we do as a developing economy will require that we power our vehicles, we power our turbines, we power our homes. So energy would always be in demand. Food would always be in demand. So there are frontier sectors that when you look at the reality of a fast-growing population, you look at the reality of globalization, rapid digitization, those sectors will command value now and in the near future. So you want to start investing in learning. Whilst you're still in 9 to 5, you want to start investing in learning about those sectors. You want to run a few experiments here and there within the rules and sort of expand your knowledge base around how entrepreneuring works. I think those are some of the steps that we can take as professionals towards building wealth. Invest in knowledge access, investment access, partnering with professionals, and then paying attention to frontier sectors of the economy that will shape today and tomorrow. Thank you.
That's a lot of information, and I'm sure that people can digest that. I'm just going to go quickly to Simbiat, just based on what he has said. So, what opportunities exist in the frontier or mid-cap stocks that can deliver both capital appreciation and portfolio diversification for the discerning investor?
Okay. Thank you for the question. So just looking at recent global trend and what's happening in the market, we can see we're about to experience rate cutting in global advanced markets. So what that means is we're going to see capital flows come from those advanced markets into frontier markets, and looking at what investors to be buying in times like this would be one for your fixed income. You should go long on bonds, which basically mean invest in bonds. So also in Nigeria, we are expecting rate cuts by the CBN, right? It just means long term taking advantage of rates at the moment in fixed income markets. And switching to companies for equities, looking at rates getting cut down the line, what that means is borrowing costs for players in the real sector is going to reduce. And if borrowing costs reduce, it just means that you are able to borrow more at lower rates, which means you're able to expand your business. Expansion of business means eventually it's going to trickle down to the bottom line and the profits, right? So for players, we expect players in the real sector to do well on the back of that, and also looking at the currency side, that's fixed exchange rates. Inflows into the markets means stability in exchange rate markets, and also naira stabilizing could mean companies that have FX liabilities, for example, they're able to record gains on that bit. So generally, what we're saying is just invest in companies in the real sector, and we have quite a number of firms in the markets in that sector.
Okay, thank you so much. That's very insightful. You have to just look into the market and decide what you're going to invest in. And again, what Samuel said keeps replaying in my head. Don't buy property, okay? Buy that bond. I think we need to say that today. So over to Luke. How can collaboration between individual investors and institutional advisory firms create frameworks for intergenerational wealth transfer within Nigeria's evolving financial landscape?
Thank you very much for your question. I mean, that's an interesting one. I think this starts with creating more awareness, first and foremost. I mean, we're in a market where financial literacy is very low. What you realize is that a number of people really don't even know what the financial market entails. They don't understand the different asset classes we have in the financial market. So there is a need to push out more financial literacy. And thankfully, that's what Zecrest has been doing in recent times. We've been able to have financial literacy sessions at different companies across different sectors in Nigeria. And no one is applauding. Why? Please, can you give us a round of applause? That's a great feat. Thank you, thank you, thank you. I know I forced you to applaud, but yeah, I'll take that. Thank you. So, I mean, so that's where I start from. We need to have more financial literacy campaigns. That way we're able to reach more individuals, help them to understand, what the financial market entails, help them to understand the different asset classes they can invest in, as well as, the different investment instruments available in various financial markets. And that way, when they have, sessions with their wealth advisor on what to do around, investment planning, helping them to understand what their, goals are in terms of investments. Once the investment advisor is pointing out some, asset classes that they need to invest in, they will have a better understanding of that. And also that will also help them to understand how these different, asset classes and investment instruments fit into their, investment goals. So it basically starts with, having that financial literacy, helping people to understand the markets better.
Okay, awesome. So talking about financial literacy, I'll ask Usman, for professionals that are planning retirement or they just want to diversify offshore, what principles should guide cross-border asset allocation and FX management?
I'll start with about just two principles. So as you go into the journey of building your portfolio and crafting the best of classes of assets that you want to invest in with our experts here, it's important to also have diversified bank accounts in those assets. So if you are investing heavily in, for example, in a USD-based asset, don't leave a Nigerian bank account to receive that dividend when it comes, right? You need to have a USD bank account that is receiving that capital for you. It has a lot of other advantages. No, that's number one. Diversify even the bank account holdings that you have. Number two is also, in the effort of diversifying your portfolio, you are also going to become a global citizen in a way. Yeah. And in that effort, your plan to grow your wealth will also start to evolve with the advisory of Zcrest, of course. And then you start to grow as such. But you need to have bank accounts that are domiciled in those currencies for you to adequately manage your portfolio. Then also, I think the other thing is that using a very centralized platform that allows you to manage all of this accounts in one place is very, very efficient. It allows you to be able to move liquidity very quickly. You can convert different currencies, on the fly and instantly get value into your foreign bank account. And that's where really our product comes in, which is a Leatherback product. We offer global banking services to our customers, where you can have a proper USD bank account here, and you may want to move value to a GBP bank account in the UK. It's just instant. We have that capacity today. Yeah.
Okay, thank you so much, Usman. So I'm going to take a final thought from everybody in like 30 seconds. And just, can you talk to us about how organizations or individuals can collaborate with institutions like Zcrest in terms of long-term financial planning? So in like 30 seconds, we can go from Usman and then go down or go up.
Yes, so organizations can collaborate with Zcrest by coming to us and letting us know what their plans are, what their objectives are, and through that, we're able to structure investments for them that meets their objective. So once we know what their plans are and their objectives are, we're able to structure something for them. Thank you.
Just want to add more to what Joseph just said. You can start coming to us now. We have our representatives everywhere within this building. So if you have questions, inquiries, you want to understand the market better, you want to know the investment products to invest in. I mean, as a matter of fact, we have different funds here at Zcrest, talking about the dollar-based fund, the naira-based fund. I mean, we have a couple of them here at Zcrest. So if you are looking at starting investing today, I mean, they always tell you that yesterday was the best time to start. Today is the next best time. So you can start right now. And we have these guys all around to attend to your request. Thank you.
Okay, so that will bring us to the end of our panel session. I want to say a very big thank you to all our amazing panelists. You really gave us quite insightful content. So right now, if we have any questions from the audience, we'd like to take it at this moment. I see a hand at the back. Do we have mics going to them? I see one hand at the back. Do we have any other questions in the audience?
Okay, right there at the back. Please just keep your questions short and straight to the point. Thank you.
Good morning. Thank you for this. My name is Felicia Ogunson from Africa Oil and Gas Report. Everything I've heard is about individualism. Oil and gas companies, especially the IOCs, the established ones, they have what you call cooperative societies within a company. Nigerian companies too are beginning to have some of that. Take, for example, Seplat, Panocean, e.g., all of them. They bring in a set of engineers, young people, 30, 40, 20-something. These people are going there for like 25 years. They start them off for $1,000 each. So in a year, that's 12,000. You have not said anything, or I've not heard anything about how cooperative societies within these organizations can actually bring their money, put their money together, and you can create instruments for them. Please bear in mind that people in this society, in this cooperative society, these companies, they are not tied into those companies. So they can actually move out of those companies within 5 years. Does that also affect the pooling of their funds? Do you understand what I'm saying?
I think any of
All right, thank you.
Take the answer.
Okay, thank you for your question. I mean, that's an exciting question, really. So for us at Zcrest, I mean, we have different services that we render to both retail and institutional clients, as well as cooperative societies. As a matter of fact, we've had different engagements with different cooperative societies spanning the oil and gas industry. So what I would just like to see on this is that for any cooperative society, for us, we need to understand again what their return and risk objectives are, and that we will be able to come up with the right investment solution. And more often than not, what we've also noticed when it comes to cooperative societies, that there is the need for adequate flexibility to ensure that liquidity needs are usually met when the need arises, right? Because there are times when members of these, excuse me, there are times when members of these societies would like to make some redemption. So we always need to ensure that, liquidity is at the forefront when it comes to managing portfolios owned by, such societies. But yes, we have investment solutions available for any cooperative societies, in the industry. And if you have further questions or you want to make more relevant inquiries relating to how we help cooperative societies manage their funds, you can always reach out to us. We are available today. You can reach out to us at any point in time. And even if it's going to be after this session, you can send us an email, you can call any of our representatives here, and we'll definitely attend to you. So we are definitely big on managing funds owned by cooperative societies. Thank you.
Thank you very much, Luke. Do we have any other questions? I see a hand in front,
Where exactly? Your left or your right?
in the middle.
Okay, all right.
Yes.
I see.
And there's a
Thank you very
third hand.
much. I'm really inspired by the discussion this morning. Well, property has actually been one of the reliable investments over the years. But today I'm hearing you say, I don't know if I just need the clarity, that we should not buy property, we should invest in bonds. What does that mean?
I said that just based on the returns, but I'd like the experts' answer.
Okay, so I get that question. No one actually will tell you not to buy property or not to buy stocks or not to buy bonds. So, when someone says that, I'm sure there is definitely context around it. So, you as an individual, if you're interested in buying property, what your investment advisor will typically tell you is that you need to understand, the risks involved in investing in, properties, right? In investing in real estate in general. One, there is a liquidity risk. So if you decide to buy a piece of land or a particular duplex somewhere in Lagos, and then the plan is that you are not, you are not looking at living in the building, or you are not planning to raise a building on that piece of land. Rather, you plan to sell that piece of real estate maybe the next 2-3 years. The major risk to be mindful of is liquidity risk, right? And that's when you intend to sell, are you going to find a willing buyer at that point in time? It might take some time. For when it comes to the sale of, real estate property, it can take up to 3 months to even about 2 years before you can sell your property. And then another risk to be mindful of is evolving regulatory landscape. If the land, say for instance, is in Lagos, you don't know what the Lagos state government, will come and announce within the next couple of years, and that might just result in you losing your real estate completely. But in terms of performance, that's the risk side of it. In terms of performance, over the years, we've seen real estate, yield very good returns, right? It's almost at par with dollar-based investments. If you are looking at exchange rates back then, that's 2017, 8 years ago, just around 360 naira to the dollar. Where is it now? About 1.5 thereabouts. So that means about 5x. in terms of return if you had invested in dollars, even way more than that when you factor in, maybe interest payments on your investments. And your real estate is almost giving you that kind of return, right? If you had bought any property back then, I mean, by now, maybe you have up to 4 or 5x return. But what you need to know is this, when it comes to investing, there is what we call portfolio, and your portfolio just comprises all the different investment instruments you have. So be it equities, be it bonds, be it treasury bills, and be it alternative investments like your real estate. So what your investment advisor will tell you is based on your risk and return profile, this is the portion you should have, allocated to equities, to bonds, to treasury bills, and this is the portion you should have allocated to alternative investments like, real estate. So there is absolutely nothing wrong with real estate. It's just you having a better context around what your investments returns are, investment objectives are rather, and that way, your investment advisor will be able to come up with the right assets allocation that might include real estate if you have, the risk capacity to accommodate it. So that's it. Thank you.
Okay, I think I saw one more hand in the audience. Okay, so if we have no more questions, I would like to thank everybody for their attention. Again, this is financial literacy. So what I hope we've all gone away with is that you have intention, that you don't just invest your money because you have a lump sum and property is the only thing you know about, and that you just consult. You have support with teams like Zcrest and they can help you. And also just think about it. Oh, I want money for school fees, that's why I'm buying this. Or I want money for this, is why I'm buying this. Or I want this for that. So it's really just having a conversation with someone. And I really hope that a lot of us take advantage of the team that's on ground and just get more information that helps us 5x our wealth, 10x our wealth in the nearest future. Thank you for your time, and that will be all from my panelists.
Thank you very much, panelists. Thank you very much, Madam Moderator. Allow me to beg your indulgence. Please just step forward and bunch up for a group photograph. Thank you. So we'll have two group photographs, one without the plaques and the second photograph with the plaques. Our host, the president of NAPE, Mr. John Bosco Uche, FNAPE, will deliver the plaques, will present the plaques to our speakers and panelists. Thank you very much. We also have a high-powered delegation from Sonatrach with us. This is their first time in Nigeria attending the NAPE conference. That's the National Oil Company of Algeria. You're most welcome. And yes, once we're done with this presentation, let's have the plaques. Thank you. Simbiat Bada. Yes. Simbiat Bada. And okay, Joseph Adegunwa next. All right, Joseph Adegunwa. Ayolua Oladimeji. Luke Ofojebe. Usman Amusat. So we'll have a group photograph with the plaques. Thank you. All right, let's have that final group photograph. This time with the plaques. So once we are done with this activity, we have the feedback mechanism instituted by the Monitoring and Evaluation Subcommittee. So that video will come on the screen right now, and that will give you more information as to how to give us your feedback regarding the events in the conference. Thank you. I'll play for 2 minutes and we'll move straight to the provide feedback via the web app. All right, we'll have the next presentation right about now. Please join me to welcome the Research and Portfolio Manager at ZQuest Group, Charles Njokwe. Round of applause for him as he takes the stage for his presentation.
Good morning, distinguished professionals. Good morning, everyone. First, I would like to thank the ZQuest Group for the opportunity to take this section. Also, I'm honored to be in a room filled with professionals that understand, perhaps more than anyone, what it means to take risk. Oil and gas professionals are actually risk takers. They understand what it means to explore. They understand what it means to refine. They understand what it means to extract value in an uncertain terrain. Right? That is why it is important that we also have this section, because investment is like that. Just like what we have in oil and gas, in explorations, for instance, you plan for volatility, you try to manage complex cycles, and you try to extract value regardless of the risk that others see. Now, investment is similar to that particular set of activity. Investment is simply turning volatility to opportunity and actually turning uncertainty to your advantage. And that is why we are having this particular section, tailoring ZQuest product suites for oil and gas professionals, because it is important for you to know how and what products to invest in. We've had the panel section, and we've been able to learn one or two from that section. That section was actually insightful. For me, I had several take-homes, and I have several things in mind as well to ask, and I believe everyone here have one or two things to ask with that regards. To start, so as an individual, what are the various opportunities you have with ZQuest to take advantage of? Now you have access to loans via our subsidiary. We have consumer and payroll lending services for consumers, for both individuals and companies to take advantage of, right? Is one of our products that you can actually try to take advantage of. Also, as individuals, you can take advantage of investing in mutual funds. Mutual funds are simply a pool of funds for the sake of those that do not understand, a pool of funds. And you have investor A, B, C trying to invest, trying to take advantage of how they can earn on their investments. Now, if investor A decides to invest on his own, the rate he might be getting for such investments might be low. The same thing would occur for investment B, right? Or you might decide to, or you might not have enough finance to take advantage of perhaps the minimum entry point of certain investments. What mutual fund does is it collapses the investment of investor A, B, C to a point where you're able to invest and take advantage of the interest rate in the market. Right? In ZQuest, we have various mutual funds for you to take advantage of. Mutual funds in the money market, simply investments in money market instruments. Now, what are money market instruments? Instruments that are invested in short-term debt instruments. Treasury bills, your commercial paper, your fixed deposits. Basically, that is investment in money market. So, money market funds or mutual funds are funds that are invested in such asset class, right? You can take advantage for us at ZQuest, our money market fund currently is around 18%. So you can actually take advantage of that return on such asset class. Then you talk about fixed income funds, right? For fixed income funds, there are funds that are invested in fixed income debt instruments, that is bonds, be it corporate bond or state bonds. Just take advantage of that, right? Also the dollar fund, in the panel section, one of our panelists discussed that we have some funds for you to take advantage of. The dollar fund is one where you try to take advantage of the market, try to hedge against currency risk, right? That's an investment option. Then we have direct purchase into stock. You want to invest in perhaps foreign stocks or local stocks. You can do that via our platform at ZQuest, right? You can do that. If you want an opportunity for your fund manager to help you think through what stock to buy, when should I buy, when should I exit, what is the ideal kind of stock for me to be investing now that rates are going down. You can actually invest in our equity fund, right? You can actually invest in our equity fund or in any equity fund where the fund manager takes off the challenge of actually thinking through investments classes for you to invest in. Also, you can also do direct purchase of debt instruments. You can buy T-bills directly in the market or commercial paper directly in the market. Even with our app, right? Even with our app, you can download our app, for instance, and you're able to take advantage of that without any third party, just for you to be able to take advantage of that asset class. So for an organization, what are the benefits included for an organization to take advantage of? I would like to say that for the sake of this presentation, we have categorized the oil and gas players into 3 life cycles. The first is the frontier and discovery phase, where you do exploration and appraisal of oil fields. That's what you do. Then also the second phase, development and growth phase, where you talk about project execution, project construction. That phase is usually capital intensive. Talk about maintenance, construction, building, and the likes of them, right? And also the last phase, which is the mature phase, where you, after you produce your oil, or you've perhaps gotten oil and begin production, you're now looking at how you want to maintain such oil field in the long term, right? For those 3 different phases, regardless of the size of your firm, be it a small player, a large player, you fall in any of those 3 phases, right? And there are opportunities for you as a player to take advantage of, right? Each phase requires financing, and even as a company, you also want to invest. Our ZQuest Capital and ZQuest Finance Group help such entities with financing when it comes to investment funds like PE and VC and the likes of them. Also help in line of credit, like exploration line of credit for companies, firms that are along that line. Also, when you do your day-to-day cash management, your day-to-day operations, operating expenses, we have our entity, one of our subsidiary, to help you take advantage of cross-border payments, like cross-border transactions. You want to be able to pay your counterparty in other currency very easily and all, to get that quick quick turnaround time. We have an entity that can help you take care of that part of your business as well. Last but not least, like I mentioned, is the cash flow management system that will help organizations prepare for. And in a nutshell, what I'm saying is we help in treasury management, right? Treasury management, we help you to optimize idle funds. So instead of your funds to sit in your balance sheet or in your bank account doing nothing or earning little to nothing, we are able to help you take advantage of high yield instruments. Now, mind you, because we understand that these funds are required often, we understand that these funds are used to day-to-day operations, so we know that these funds will be required as quickly as possible, maybe between 15 to 30 days. So we ensure that we are tailoring these investments or these your funds into asset classes that we can easily call back, asset classes that we can easily give you liquidity when the need arises, asset classes that we know that are safe, right? That is the essence of treasury management. Now, the last but not the least is this point I want to emphasize on, either as individual or as a company, right? One of the panelists discussed that we try to profile clients, try to profile individuals, investors, basically to see. He mentioned, if I recall clearly, he mentioned that for younger ones, they can take advantage of the equity market. For older ones, people between age of 50 and approaching retirement, it will be ideal to put all your funds in equity. Then you can now start structuring into fixed income asset classes. Basically, what we do is that we can help you create an investment solution that is tailored to yourself as an individual, tailored to your business, or tailored to your organization. So we profile you. If it's an individual, for instance, we check how much time do you still have to work, how much is your income, your bonuses. So what kind of risk can you take? Are you risk averse? Can you take risk? Then we try to create asset classes for you to be able to take advantage of in the market to give you high return. Basically, even as a business, we profile businesses too. I recall someone asked in the audience that what do we do for cooperatives? Yeah, we also, they fall in this bucket. Either you're a cooperative, gratuity fund, endowment fund, staff savings scheme, just mention it. We help you profile such funds in such a way that we are able to meet the needs of those individuals, or for the sake or purpose of at which that particular fund was created. Right? We are also able to help you make risk-adjusted return. So, in as much as we want your funds to be safe, we also want you to make returns that will outperform the market, or perhaps returns that will outperform inflation. Perhaps return that when you see, you know that it is better off, you are better off investing than leaving your funds in the bank, right? That is the essence of a carefully curated portfolio. Now, this works for all and sundry, both individuals and corporates. To close this section, I would like to say this, right? In as much as you are leading when it comes to exploration and production, I would like to challenge you today that you should lead when it comes to financial exploration, right? The world does not only belong to those that make money, it also belongs to those that make money work for them, right? They make that money work for them. It is important for you to know how to do that, right? Oil wells will dry up eventually. Our oil wells dry up eventually. We get to an age where we can no longer work, perhaps due to old age, or we've gotten to that age of certain things that might occur. But do you know that it is the funds you have invested, those funds will keep yielding. They keep yielding value. It is those funds even pass on to your children and even to their own children. So it is important we know that even as professionals, as we are working, we'll learn to challenge ourselves, to explore when it comes to financial products, investments. That is the essence of all of these sections we've had today, to challenge us that we should take risk when it comes to investment. When I mean risk, ensure that you have wealth managers or a good fund manager that will help you or guide you to take the right kind of risk. If you look at the booklet on your table, right, at the first page, you can see ZQuest. So you can perhaps click on the website or contact our client services to help you when it comes to any question you might ask around your business and beyond this. So this is beyond this section. You might not have the time to meet or approach our wealth managers that are standing around the corners of this environment today, but you have the opportunity to just go on this app, on this book, on this platform anytime in your own comfort, to be able to reach out to someone to help you explain how you can get started. So the right time to get invested is now, right? The right time to get invested is now. So do not wait for when you retire. So the right time is now, please. Like I said, again, I'll leave with that. In as much as you are leading when it comes to exploration and production, please try to lead when it comes to financial investments or financial exploration. Thank you so much.
That was very, very insightful. Thank you very much for that very, very informative presentation. And yes, if you have any questions, please feel free to meet with any of the team members from Zcrest Group. They are still with us in the hall. Thank you very much. Research and Portfolio Manager, Zcrest Group, Charles Njoku. Thank you for that presentation. All right, at this time, please join me to welcome the Head Brands and Communications at Zcrest Group, Onyinkansola Adeboye, for the sponsor's closing remarks. A round of applause for her as she takes the stage.
Thank Thank you. Thank you. Good, good morning, everyone. I think it's been a very informative session. There's been a lot of conversation about money, money, money. And I can understand that sometimes it can seem like a lot because I joined the ZCRES group as a communications expert, and you can imagine having to be a communication expert communicating all of these things that they've been saying. It took a lot for me as well to understand the basics of financial management and financial strategies. However, one thing that is important to note, and one thing that I have always said, is that finance and conversations about money are very integral, whether as individuals or as organizations. And what our mission at the ZCRES Group is to improve capital flows across all productive sectors of the economy. And because of that mission, it is important to us that conversations about financial literacy and understanding how money works is something that we continue to push across, different sectors and, across different sectors and with our different stakeholders, right? On behalf of the ZCRES Group, on behalf of our staff and the management of the ZCRES Group, I would like to say a very big thank you to everyone that has joined the session today. We hope we were able to induce a certain level of curiosity in you to understand some basic financial strategies better, and also understand how to improve some of the financial decisions that you've been making in your day-to-day activities. Like my colleagues have said, the ZCRES Group is available to respond to any questions you may have. We're also exhibiting at the main center if you would like to take some conversations further. I mean, we're not telling you to come, and we're not trying to sell to you or telling you to come and onboard on ZCRES. We're basically telling you that we can give you financial advice. So please feel free to come to our booth. If you have any questions, our wealth advisors will be more than happy to respond to them. Thank you very much once again for joining, and please do have a lovely day ahead.
All right, thank you very much for that bit of information. Thank you very much. That was the head brands and communications at ZCRES Group, Onyikonsola Adeboye. And yes, she has given us the closing remarks for today's event. So we are to take words from the president-elect of NAPE. And yes, she will join us on stage to give us the closing remarks. Please make welcome Mrs. Olajumoke Ajayi, FNAPE, for the closing remarks.
Good morning, everyone. And first, I will say thank you to our sponsors, ZCRES, for sponsoring this session. Not only did you sponsor this session, you also exhibited this year. And this is your first time. Can we give them a round of applause? Sponsoring an event and exhibiting. And I believe that, like your group managing director said, that we should expect something much bigger next year. So let's give them a round of applause for that again. Thank you very much. And I believe that, where our work is to find oil and gas. We earn money every month, and now they've come to teach us how to ensure that we save for the future. And I believe that what we've had today, we put it to use, and I think they are still around to give us more details on how that can work. So we say a very big thank you to you all for attending, and we believe that you still stay with us till the end of this conference. There are different activities still lined up. Tomorrow morning we have executive session, which I can assure you will be an interesting one. And this evening, we have our Women in Geoscience and Engineering program, which will start at between 4:30 and 5 p.m. I want to encourage us all to be there because there's this keynote speaker that is coming, and I believe we'll all learn a lot from her. I won't say more than that. So our female, make sure you make yourself available there. So I wish us all the best, and hopefully we'll see tomorrow at the next executive session. And for the ladies, we'll see this evening. Thank you very much, sirs. Our chairman, AC, Advisory Council, our fellows, and all our elders that are in this room, and all our active members and non-members of NAPE, thank you for coming, and we believe we'll continue to see you because I know you believe in us and you believe in what we are doing. God bless you all.
Thank you very much, ma'am, Madam President-elect of NAPE, for those closing remarks, Mrs. Olajumoke Ajayi F. NAPE. And ladies and gentlemen, with those words, we have indeed come to the end of this event. Thank you for your time, thank you for your patience, and most importantly, thank you for your presence and your participation. Until the next event, keep enjoying the conference. Thank you.